Good afternoon, everybody. All right, welcome to tonight. Tonight is what we always call a DTS special event. They're every 2 to 4 weeks approximately. I don't think we've been together since it was probably 4 weeks ago. The last one was that technical analysis little quiz, if you will, that I kind of gave people. Really liked that one. I got a lot of good comments from that. You know how on a lot of these, sometimes I'll send around the day or day before a little paragraph saying, boy, I put this together. It's really going to be an extra good one. Don't miss it. Well, I didn't do that for this one. It's not that I don't think that it's good. It's just that it's probably in that category that some of you won't like as much as the others. Like I said, I never like to disappoint, so I just want to let you know what you're in for. Last time we did that great little technical quiz that you guys loved, and 2 weeks from now we're going to be getting together again. So the next one's not far away. The next one is going to be April 8th. Title to be determined, but it's going to be of a more technically oriented one. I have a couple things in mind, so we'll get to that then. This one is the best and worst advice. It's in kind of the category of soft topics. But it doesn't mean they're not important, because when it comes down to it, I think the soft topics, which is a very broad category, probably ends up preventing more people from being successful than anything else. Well, it's hard to say. It depends upon when you figure the problems start. I mean, to me, there's, and I started a long time ago, and I came in with an open mind of looking at everything out there from other people to fundamentals to this to that, and I came to my own conclusions that I became 100% technical very early on. And after what is, I hate to say now, 20 years of doing this, where's my technical rating right now? What percentage technical am I after starting off 100% technical? Then after 20 years of seasoning, I finally settled in on what percentage do you think? Yeah, like 110%, exactly. Yeah, because there is absolutely no other way that anyone like you or I, assuming that you are somewhat like I, can make money in the market. It is a great way to do it. There is no other way to me, period. And I say that not because I have any agenda, but because I would be willing to do anything to make money. If there was some other great thing out there that would do better for me, I would use it. And over the years, well, early on, I tried a lot of things. I come to realize that this is exactly what we need to be looking at. So for today, naturally, I feel the first step is you have to understand technical analysis, but that's not really that hard to do, at least not to the level you need to make money. I've had a lot of people say to me, well, Paul, I'll never learn charts like you know them. And I say, well, you don't need to. You need to know charts well enough to make money. And the problem a lot of people have is that they learn the charts well enough to make money, but they don't learn the other peripheral things well enough to make money. Does that hit home at all with anybody? See, the problem I see in just like a broad sense a lot of times, and I get to say this because I've just worked with so many people, both people that made it and people that struggled, both people that came to me for help and people that never came to me for help other than just asking me some questions here and there. But the problem often is that people aren't making it, and they maybe have a 90% knowledge of the charts. I'm just making up that number. I don't know what that means. But in my mind, they know the charts well enough that they could succeed, but they're not making it. And what do they turn to, everyone, in order to try and make it? What do? They're not making it. They have a really good knowledge of charts, in my mind, enough to make money. But what they do is they try to learn that last 10% of the chart knowledge, and that's not where their problem is. Their problem lies in other peripheral things, such as psychology or even sometimes math and probabilities, the other two legs of the stool I talk about. And that's why I teach the whole thing, because it's all important. The goal is for you to make money at the end of the day. And there can be, you could be a much inferior chart reader and make more money than somebody who's a good chart reader, because you have to get the money in the bank account at the end of the day, at the end of the week. So that's a little bit of what today is about, to get that thinking going in the right direction. So here is the slide that you saw probably somewhere or another. Let me get my little red ball out here. There are many sayings in the trading investment world. They become popular because many try to learn from these one-line pieces of advice. Some are worth their weight in gold, but these are barely known, the barely known ones. Most of them, the popular ones, are useless or outright wrong. It's been one of my, I guess, my little peeves a lot is that there are a lot of sayings out there that people learn when they start trading or investing that are just simply just not right. They're things that people say because they're kind of crutches that people use, or they've learned from people who don't know how to trade or invest, so they come up with these sayings. As we go through tonight, let me get this out here real quick. I may refer a few times. I have obviously at this point, I'm going to say that the information I have on the free stuff page is probably almost second to none at this point, because it's not just basic blah blah stuff that you could find anywhere. It's a lot of good information, including recordings of all these events. That's the home page there. But if you go to the home page, you can click on free stuff, or if you want to go right to free stuff, the free stuff page has an archive page, and the archive page is an archive page. And if you look around in there, you could probably spend the better part of a week going through listening to things and picking out the things you like. But there's, I think, a wealth of information. And on a few occasions, I may refer you to say, hey, more information on this. I did an event on this a while back. Go find it, look it up. So let's get started with what we want to do tonight. I have kind of a couple of bonus intro slides, if you will, I guess, because they're kind of on topic. I just want to throw this in here real quick because I've had more than a few people ask me this last couple, 3 weeks, especially since I haven't done one of these in about 3, 4 weeks. Why do I do this? In other words, why do I put on a lot of free events? Well, there are several reasons. Why do I offer this stuff, and why is it such good information? Well, there's a bunch of really good reasons, and then the final one, the one if you don't believe the others, you believe the last one, is many of you are in different stages of what you're doing. Many of you are not ready to pursue the concept of being a trader investor right now. You're very busy at your work. A lot of people that end up, turning to me are people who have been maybe following me for a couple of years or whatever, in some cases many, many years, going way back. And they've been waiting until they have the time from their work, till they retire, until they take some time off, whatever it is. So they're just simply not ready to devote more time to this right now, and that's great. So they're just kind of, keeping an ear to the ground, so to speak. Some people are getting ready to learn. And when I say learn, I mean either long-term managing of your own longer-term money, or earning extra income by day trading, or going full-time to day trading to make your income. Some people are ready and they want to check things out, and that's why they're kind of poking around. They may poke around for a couple weeks to several months. Some people are ready and they're shopping around. They've maybe just heard of me recently and they're checking me with other people, see who they like, and that's great. You need to be comfortable with who you're learning from and like their style, and I'm not necessarily for everybody. I've been told that a lot, believe me. You may want to learn for yourself, and I, unlike others, I don't poo-poo this, because I consider myself to be a reasonably intelligent person, and I tried to do this because I'm somebody who doesn't like to be told what to do, because I can figure stuff out. And I tried for a while, and I decided that the most efficient use of my time was to pay a little bit to get the bulk of this under my belt, and for me, it was the best thing I did. But that may not be the case for everybody. And whatever the other reason is, here's the last reason to me. Do you know how you get those offers for, this is a weird analogy maybe, but to me it makes a lot of sense. Do you know how you get those offers for credit cards where you get a zero interest rate for 12, 18 months, right? You can anybody get one of those? Like probably everybody gets one of those, especially today since interest rates are zero, right? You seen those? You seen those? Well, why do the credit card companies do that? They're making like literally zero money except, transaction fee. Why do they do that? You ever think about that? As a business plan, if you're the credit card company, why do you do that? What's the bet you're making? What's the business model? While you're thinking about that, and you probably know, most of you, on what back end? I mean, if you take out, well, if you transfer, yeah, there's a fee to transfer. But I mean, if you just take out their card and you use it for a year and you run bills up, blah, 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 no interest, pay it off, they make nothing, right? Well, number one, they could be doing you a good thing, right? If you use the card and you do whatever, and a year later you just pay it off and you had free money all that year, it's a good thing for you. But they're making the bet, right? But David, they're making the bet as a business thing that at the end of the year you're going to have a balance and you're not going to be able to pay it off. And boom, there goes the 18%, right? And I'm kind of look at this as the same thing, is that I'm here to help whoever wants to be helped. And if you take that information and you're able to succeed on your own from these free events or whatever, that's great. It's a win-win for me. It really is. I want to help people. And I'm proud of the people, many, many people now that I've helped to succeed. And I also know that a certain number of people are just going to get to like me a lot through time, and they're going to like my style. And if they are not feeling like they're able to make it, they're going to come to me at the end of 12 months or 6 months or whatever it is. So I think it's an interesting analogy. Oh, there's the credit card guy. There's one little thing that I wanted to answer for some people. There's no other agenda. I mean, that's all it is. I really enjoy doing this. You can tell this. And there's an awful lot of people that come to free stuff for months and months and months and months and months, and I don't hear much else from them. How do they do it? Distractions that prevent you from learning properly. This is kind of an introduction to what I want to talk about because it has a lot to do with distractions from learning properly. But I want to share with you, if I could, just a few little scam things that most of you probably know out there already. But they're things that may distract you, especially if you're new and you see, wow, look at this, look at that, look at this. Let me start by saying, trading, day trading, and or investing for yourself, it's a wonderful thing to do when you learn how to do it. There's no trick or scam to it. It's like anything else in the world. You just have to kind of learn what you're doing and stick with it a little bit. Um, but you can be distracted because it is a job and it is something you have to learn and it is something you have to work a little bit at. I think as jobs go, it's one of the easiest ones to learn. I mean, when you compare it to any other profession that you make a living at, I think it's one of the easier ones to learn. You may not all agree with that, but then again, you may be thinking that you're supposed to learn it in a weekend or something. I mean, you don't become a lawyer in a weekend, and you don't become a doctor in a weekend. You don't even become an accountant or a bricklayer in a weekend. It takes time for all those, and I don't think it takes nearly that much time, but it takes some commitment. But I want to introduce you to some things that may distract you. Back a long time ago, you used to get in your mail, in the mailbox. Most of you probably still have those out there on the street corner. They used to come in the mail. They still come by email, but I always like this because I remember seeing these in the mailbox. And you would get a big newsletter from a company saying, hey, coming up in the next 18 months, the stock market is going to crash. It would be called, the Bear Gazette, and all over the place. Crash, 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 subscribe here, blah, blah, blah. And then you get another one in your mailbox, and it would say, the market is going to soar in the next 18 months. Remember all these? You still get them in your email, by the way. And it would be called the Bullish Gazette. Subscribe here, blah, 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 blah. And you get another one saying the market is going to be stagnant for the next 18 months. It's not going anywhere. Don't waste your time. As a matter of fact, short any rallies, buy any dips. It's going to be sideways. And it was called the Neutral Gazette or whatever they called it, right? You know what those three things had in common, those three papers? No, you know what they have in common? Right, it's the same publisher. Exactly, Mark. It's the same exact person because no matter which of those three happens, right, they come back to you. So the market rallies and, you just forget about those other two. You don't know who wrote those other two stupid predictions. And and then the paper that says it's going to rally says, look, I told you 18 months ago you could have made X amount of money if you traded me. So there's one thing that happens. There's another thing that happens, and that happens today in email too, There's another thing that happens too. You get these option trades, right? Made blah, blah, blah percent. Well, here's how you do that. I mean, number one, obviously, the last one says your people can lie, and obviously that's one thing you could just do. You could just lie because I'm not sure who goes around policing this, but even without lying, what you do is you take out option trades and you offset them with stock positions. So you have one account that has an option, one that has the stock. You don't make or lose any money. You have some transaction fees, but then you get to brag about every once in a while. If you take out a dozen of these every week, you're going to get a home run, which of course you don't make money on. But boy, look at this option trade, made 450% shorting Tesla or whatever it is. And wow, this guy is a genius. Look what he did. He shorted Tesla right at the high. Well, he shorted Tesla every week for 7 weeks, offset it by stock, never cost him anything, and just made it. So there's another cute little trick. There's another good phrase out there that goes, you could have made if you followed me. You could have made, but of course, could have is undefined. You assume could have means that if you followed what I did, but you find out sometimes that could have means, well, If you would have taken my letter and if you would have traded that stock, and if you would have held it 12 times longer than I did, or if you would have entered a slightly different position, you could have made a ton of money. I had the stock out there. You could have made a lot of money. I just didn't really do it right myself, but I'm not going to tell you that part about it. The market is going to drop videos, right? You'll get this video that says, I predicted this market. Well, I'm not talking about the current environment. I just mean in general, market's going to rally, market's going to drop. And of course, the problem is that the person who has this great video has predicted the market decline for 6 years now. And there actually are several of these. I've seen them where they've been predicting the market collapse for 6, 7 years. And of course, the day that it happens, of course, all the other videos will be erased. They will have been erased, and they'll be sitting there seeing, I told you last week this is going to happen. So, there's all this stuff out there. And the reason I just like to bring it up is because they're distractions to you. I just want to emphasize to you that I've been at this a while, and if there was some super simple, easy other thing to do, that's what I would do as well. And I'd share it with you. I'd say, gee, look, here's this, here's that we can incorporate. But it's not. And what I do is not hard, but it's just simply good old fashioned roll up your sleeves and do a little bit of chart analysis and do a little bit of work. So why discuss bad ideas? Why discuss bad ideas? Well, there are many ways to do things properly that are all correct. And that, as a matter of fact, that's exactly what I teach. When I teach class, I teach exact things that have to be followed. But within that framework, what you have to do, there's a wide variety of ways you can do things. There's more than one way to make money, but there are also things that are just simply wrong. In other words, it's very possible that a certain chart comes up, a certain pattern comes up, and one fantastic trader says, I'm going to go long from A to B. And the other trader says, well, I'm going to wait and short from B to C. They both could have fantastic, professional, great trades. Who's right? Who's wrong? They both made money, right? Neither one is wrong. Neither one's right. There's just two different ways to do something. And there are lots of instances like that, right? And I want you to embrace that and fully understand that. As a matter of fact, it's really almost necessary, right? Because all of us come to the market with our own perceptions and biases and fears. And I have found over the years it's pretty much impossible to completely negate those. You have to work with them. You have to compromise them. You can't completely trade with some really, really bad habits. But on the other hand, I know there's people that, like, as a day trader, could never hold something all day. They just couldn't do it, right? I know there's people that prefer to buy like breakout type of plays and people that prefer to buy pullback type of plays. Neither one is necessarily right or wrong, but you have to learn to and adjust your trading style around what you like, what you love, and what you can't do. Does that make sense, everyone? So there's right, there's correct, and inside of correct, there's a wide variety of correct. But here's the other part of it, the big however, right? The however is there are also things that are just plain wrong that you will never really learn properly if you continue to follow the wrong things. They will impede your progress. And it's not just because they are worthless. It's not just because these wrong things are worthless. It's way worse than. Let me see if I need a sip of water here. Let me see if somebody could guess. What's the next line going to say? These things that are just wrong. It's not just that they're worthless. It's way worse than that. What is the other bad part about learning, having in your head these bad habits, concepts? It's not just habits. I'm talking about actual chart patterns, actual technical misconceptions. It's not just that they're worthless. It's way worse than that, eh? That's true, Carmen. They work on your psyche. That's not actually what it's going to say. But lead you in the wrong direction. True, but that's kind of all part of the top part here for both of you. It's kind of, they impede your progress. They're hard to correct. All those things are true. But what I was thinking of is this one, right? The one that nobody thinks about. If false beliefs, David, you're pretty correct there, but it costs you money keeping it. Right. Well, the way I word it is it'll prevent your mind from learning what you need to learn, right? The big word for me, if there was a word tonight I'd want you to walk away with, I think the bottom line would be this word here, is to embrace. You have to embrace what is correct. I've said to some people, I have a couple of people that are in the seminar program I struggle with a little bit. And the word I use sometimes is embrace. And I'll say you've never really embraced what I've taught you. You've learned it, you understand it, but you keep filtering in your own stuff. Does that ring a bell with anybody what I'm saying? All right, we'll embrace after Easter. How's that? Okay. But seriously, does that make sense what I'm saying? In other words, they learn the stuff and it's in their heads somewhere, and they're saying, yeah, okay, I got all this, I know it, but then I'm going to go do this because that's what I'm comfortable with. Okay, comfortable has not made you money in 5 years, right? It's time. Yeah, listen to Andres, everybody. I mean, Andres, he's in the room with me. He's a student. He's just, and again, I don't know Andres personally or his account, but I just know in the room he seems to be doing just great. And he's saying a big thing. You have to unlearn the wrong stuff. And I just, again, the advantage I have to sit here and talk to you is that I've worked with so many people and I see the levels and I see and myself. I remember myself going through this because, as you know, I was not anything to do with the market before I started. I wasn't on Wall Street. I wasn't part of this. I'm just a nobody who learned this like I think you guys should or can. And I think that's the best student, to be honest with you. I've had and I've seen both. I've seen both sides of it. The people that cling to their old beliefs and they kind of come with the attitude of, they're not making money, they're not doing well. And they come with the attitude of, well, okay, show me what you got, and I'll kind of take what you have as some tips. Now, if you're making money, congratulations. I'll never talk bad against that. That's whatever it is. There's different ways to make money. My problem is when you're not making money, and then you come and say, well, show me a few tips, and I'll learn those tips, and maybe I'll add it to what I do, and you never embrace what I'm teaching you, and you never really use it, and then you struggle. So it's kind of like, lead, follow, or get the hell out of the way is the expression that comes to mind. Learn what you're doing yourself, embrace what I teach you, but you have to come out of the end of the chute making money, or you're wasting your time. So embrace is a word that I like a lot for some of this. Number one of the worst advice given. When managing, get your stop to break even as soon as possible. Get your stop to break even as soon as possible. This is just simply completely wrong. It's one of the more common things there. As a matter of fact, I can tell you this is such a common thing because I hear it all the time. I mean, just all the time. Somebody's explaining to me a trade they did in an email and blah, blah, blah. Then I got my stop to break even. And they're bragging about it like I should be, thinking, wow, this is a good trader. They got their stop to break even. What a good thing. In the room, I'll hear it a lot of times from newer people. It's like, Paul, aren't you going to bring that stop up to the break even level? And I'm like, no. Break even makes 0 sense, period. Now, some of you know this already. My apologies for those of you who are bored with this, but for many, they don't. Here's the reason why. Is break even, is that 100% on a chart or 100% in your head? Which is it? Your break even on a trade, is it on the chart or in your head? Yeah, it's 100% in your head. There's nothing on the chart to say that level is going to support or be held up. And why is it such an important thing in your head? See if somebody can give me the magic words. Not a seminar program member, because I know you know this. Right, because if you set your stop to break even, yeah, you're not a loser. That's the key word. That's what everybody fears in trading. I don't want to be a loser, right? I've even seen stops set like to 2 pennies in the money instead of 2 pennies out of the money because that'll make you a winner. You'll have 13 cents of profit on your screen instead of 13 cents of loss. Yeah, Carmen cheated, but that's okay. I didn't mind. You manage the chart for what it is. And the loss that you could create an opportunity can be devastating. And I don't have to look far, guys, for this one at all. I mean, I looked at the first trade I did today and just said, well, what if I had the attitude of get my stop to break even? One of the best trades. I mean, and the funny thing is if you go look at your own trades, you will probably find, if you're a reasonable chart reader, again, I have to add that because if you're a terrible chart reader, you're not going to have any winners at all. But if you're a reasonable chart reader, your concept of getting stops to break even probably has cost you more money than anything else you can imagine. This is today. This is FITB. This is actually my first trade today, I think, at 10:15. That was the second trade, but um, FITB entered at 10:15. I didn't do anything until after 10 today. Right down in here, right? Great trade. Target 1, target 2, target 3. Yeah, one of the better trades today. But this is a 5-minute chart as a day trade. Let's just go take a look at the 1-minute chart inside of there. Here's FitBoy today. Boom, 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 boom. Here's the 5-minute chart, the entry and the play. But here's the 1-minute chart. There's the entry right there, just coming off that bottom. Really just off that bottom, right? So there's the entry. And stick with me. When are you going to do? If you're scared to death as a trader, here's that nice pop, right? There it is. We broke across the prior highs. So what do? You set your stop to break even. Well, guess what? You just got out of break even. But that's okay. I can't lose any money, right? I set it to break even. And you lose this entire day. You lose the whole thing. So there's just absolutely, as a matter of fact, I lean as a professional trader, I lean very much the other way. And I know this attitude is probably shocking to you. So if you're very, sensitive, cover your ears for a couple of minutes. But I have the attitude that if I spend time and research looking for I took 3 trades today initially. I did a GE short later, made a little money, but basically it was the 3 trades today. And I spend time the night before, studying some charts, looking for what I want to do, right? Andres, people in the room, we get together at 9 o'clock. We reconcile, a few handfuls of symbols, pick out the best ones, right, Andres? And Andres, right, you did another bank today, right? What did you do? Share with everybody. What did you do? I mean, they're the same pattern kind of, but you did Key. Yeah, that's a bank. It's a bank, right, isn't it? Yeah, Key. So we take all this time, and when I go through all this trouble and I get a trade that I want and I get a perfect entry, you know what I want to do? I want to stick with the thing through whatever. I want to stick with it. I don't want to get out as soon as I can. I'm even willing to bend my stops sometimes in order to stay in the trade. And that makes me a lot of money. But one of the differences is that I have confidence in what I do, and I know what I'm doing, so that I am not trading afraid all the time, which is the problem for a lot of people. It's ridiculous to even comment on how bad this is, yet I have to comment on it because it is so extremely common. And please, folks, some of you try to be realistic in terms of looking at your past trades. We have a tendency sometimes to sit here and say, well, that's not me. And you know what? Sometimes it is you. So check and see if this applies to you. If you are so afraid of a trade, if you're so afraid of losing, you should not even be paper trading yet. There's a balance between good chart and money management and a system that literally guarantees you cannot make money. Most choose the latter. What do I mean by that? I mean, there are a lot of scared management policies that have the goal of just trying to keep your losses small, and that's what you'll do. It's on another slide, so I don't want to go into that here, but if that's what your goal is, that's what you'll end up doing. And a system like this pretty much guarantees you can't make money despite what you're trying to do. All right, number 2, we have a lot to go through here. Actually, P, trading afraid, I think it's going to be addressed on in the next 5 or 10 minutes. At the bottom, it'll talk about what to do, and then ask me then if you're not clear. Obviously, there's not 3 words that I can say to you, but there is a concept that you have to understand. Manage with the goal of minimizing losses. This will save you money, especially as a new trader. And I know for a lot of you, you're going to say, Paul, don't tell me this is bad advice. It is bad advice. It really, really is bad advice. Now, there's a couple of concepts I do want you to understand. Number 1, there is nothing wrong with properly managing a trade that is not working and accepting it's time to move on. I'm not saying that I would never minimize a loss. I do it all the time. But everyone, do you understand the difference between being forced to minimize a loss because it's not working and having a trading style of constantly minimizing losses because you don't know what you're doing? Did those 2 sentences make sense to you? Did you understand those 2? Should I say them again? Did you understand those 2 sentences? Because like for P, you just asked the question. That's one of the key things. There's nothing wrong with deciding, okay, this just isn't quite right. If it does any more of this, it's not going to work. I'll change the stop and I'm going to save a little money. That's fine. I accept that. That's okay. That happens sometimes. But to get in a trade and your first goal, the second breath you take is to say, okay, what can I do now to cut this loss short if it doesn't work? And you know what? Just for fun, it's 5:32 on a Wednesday afternoon. How many people freely admit they do that? Just for kicks. I know some of you aren't even trading, some of you won't admit it. How many of you get in a trade, and it may be a trade you intend to hold for hours or whatever, and you are immediately looking at the screen, hand on the mouse, right? Look at these are people that are admitting it, and just what can I do? What can I do to minimize this loss or get out of some shares, or what can I do? I mean, I have to warn you, if that's the level you're at, I don't want to be mean, but you're just not going to make money doing that. You have to step up to the plate sometimes, take a full swing, let the ball land where it's going to land. You may not have the skill to make money yet, but there's a process to go through to determine that and to do it properly. See, the thing is, if you start with bad habits, listen carefully, if you start with bad habits, even when you get the chart reading skill to make money, your bad habits are going to have you losing money. Does that make sense? And this is why the process is so important. And this is what I hate about people that go out and just kind of start winging it out there. If you start without knowing what you're doing, you develop bad habits because your habits tell you to minimize losses, to take quick profits. And then someday down the road, maybe you do have the technical skill to really make money, but your habits stay with you. And this is where so many people get stuck. I see so many people that can read a chart. And I look at their trades and I'm just like, what the heck are you doing? What are you doing? This isn't, and they say, yeah, I know it's embarrassing. I didn't want to show it to you. Well, then why are you doing this? So if your goal is to minimize losses, I guarantee you will accomplish your goal. I guarantee you'll accomplish. If that is your stated goal, that when I get in a trade, I want to minimize losses, that's what you're going to do. You're going to have a whole string of small losses, and that's what a lot of people end up with, right? And here's a question for you. And this is a question you probably never asked yourself. When are you going to start maximizing your gains, or actually trying to maximize your trading in general? Do you have a plan for when that's going to happen, or is it just one of those osmosis things? If this is what you do, there is a reason. And here you go, P. Here's the slide I was talking about, right? You have no confidence in your trading. You don't have the winners to offset the losers. So you prefer death by 1,000 paper cuts, right? Now, how do you fight that? Well, the way you fight it is easy to say in words. It's not as easy to actually do. Learn what to do, build confidence at low levels, and increase the risk gradually. And this is exactly what I talk about in that Friday Introduction to Technical Analysis seminar that you're all invited to. It's a 4-hour seminar, but I invite everybody to it. And we discuss that topic at some length there. And that'll be coming up on April 17th is the next seminar cycle. I think April 17th. Let me look real quick. April 17th. Yeah. The calendar's here. You can check it out. P, you asked the question. So let me ask you. I mean, I know this isn't like a pill that you can take and it gives you the, but I mean, do you understand what that means though? I mean, like anything you do, you have to have confidence in what you're about to do. You have to know you can do it. You have to be able to say, okay, you know what? If that trade was bad, if it stops, I really don't care because that was a good trade. That's what I do. That's the setup I want. That's the entry I want. And you know what? I do it again tomorrow and I do it again the next day. How many of you can say that when you stop out of a trade? That's a rhetorical question. I don't really want you to answer that one because not many of you probably can. Many of you get just kind of pushed around by the charts and say, well, gee, I stopped out of that. I must have done something wrong. And I can do that again, that's for sure. Some good trades don't work sometimes. We play odds. Something happens. Sometimes it just could have been that you got in just 25 seconds before one last big sell order came through. It knocked you out. And if you would have taken an extra sip of coffee, maybe it would have been the best trade ever. But you probably don't even know it because you went on in the next trade. You never looked at that trade again. You never reviewed it. You never went back to say, gee, that was my trade of the week. But I got out for a nickel and there it was, right? P, thanks for sharing that, seriously, because I think it helps other people too. But it's the first part for you then, right? Learn what to do. In other words, you don't know, I mean, from your words, you don't know the difference between a lucky trade and a good trade. A lot of bad trades work. A lot of good trades don't work. It's odds. And, you have to kind of know the difference. And, I've seen it because I talk with such confidence because I have, especially in this last 2.5 years of DTS, I've been able to work more closely with people, and I've seen so many people go through the process and just get it. They just get it, and it makes me feel so good because I see them develop. They go from reading a chart to, okay, I made a few mistakes. I'm going to fix that. I'm going to fix it, and now it's like, wow, it just makes me feel good. So you have to, just like anything you do, guys, right? I mean, you wouldn't go out and operate on somebody. You wouldn't cut open your a relative's stomach to take out their appendix when you've never had a clue what to do in medical school, or you haven't been through any of the training to do that. You'd be nervous and shaky. You wouldn't have a clue what to do. And it's not a lot different in trading. You can't just walk up and just do something and say, well, okay, it worked that time, it didn't work this time. We need to have a better structure. You need to have a structure in place that you can evaluate and build on and learn from, and say this worked, this worked, it didn't work, why. Um, your trading education is a structure, I like to teach it as. And the secret after that is up to you to review to see if you're doing what you're supposed to be doing all the time. And the way you test and do it is by taking these trades at very low levels. Like literally, we talk about this Friday, so I don't want to go through it. I mean, we'll talk about it the Friday intro class coming up in a couple of weeks. But you start off literally on paper until you develop a strategy that you trust, and then you throw $5 at it. And I mean, literally, just take 10, 20 shares, whatever it is, and build up a track record of wins. And then you start saying, you know what? I only risked $5, but gross, I made $20 this week. If I had been risking $100, I would have made $200. If I'd been risking $1,000, I would have made $2,000. That's what you start thinking, and then you start getting the confidence. Say, okay, I'm going to risk 20, 50, 100, and you build into it with confidence rather than always having the bad habit first and then trying to build on top of the bad habit. It worked for a time, but right. Well, you know what? For your own good, I don't want you to use volatile markets as an excuse, because when you read a chart, it's all the same thing. I don't like this either. And again, I don't know if you're swing trading overnight. That's I always think that's tough. Period. As a swing trader, if you're going overnight and you're working a job during the day. But I mean, other than that, like day trading, it's the same stuff. It's just that it's wider stops, wider targets. And I said myself, I told the room, I said, everybody, I don't like this environment for day trading. I like boring stuff, but we've been doing great in the room. It's the same thing. I just don't like it as much. But it's been great. Today we made a whole week. Well, I lost a little bit yesterday, but I mean, it was, it just, if you know the chart, it's the numbers just change a little bit. Now, again, there are some things that are troublesome. People come on during the day and they talk, which makes markets pop sometimes. But normally you get that once every 3 months. Now we're getting it every other day. So there's little things out there that make it not as fun. But when you learn to read a chart, what you learn doesn't change in different environments. It doesn't change when you're bearish or bullish. So many people, you see these emails that I just put in the scam category that say, oh, this is a new world. We have to learn all new chart techniques. That's crazy. That's stupid. It's just an outright lie. The chart is the chart. It never changes. It's up, it's down, it moves quick, it moves slow. All that is built into what you know. It's just, it's so idiotic for people to say, not people, but people send emails to say you have to relearn something. There's nothing to relearn. It's just, it is what it is, period. Let's move on now. I'm officially falling behind. Missed money is better than lost money. Okay, this is a tough one. Why is this a tough one? Because I've said it myself to people. I've said this myself to people. And a lot of you are thinking, that's a great saying, Paul. How could you possibly criticize that? Well, I've said this to new traders because new traders overtrade typically like a kid in a candy store. As long as we're on a roll, anybody want to fess up to that? Give me a 1 or a yes on the screen. That you just overtrade sometimes. You get on a roll, you get a couple trades right, and bam, 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 you start trading to your detriment. You start trading When you lose, you trade to get back to even. When you make money, you trade because you think you're a trading god, and it always ends up to your detriment, right? This is another one. It's a big problem. You know, as a matter of fact, on one of the slides in that free seminar, I think it's in there. Or if not, it's in one of the classes where it says one of the biggest problems you're going to face. It says number one is over trading, and number two, it says over trading. It says yes, it's repeated twice because it's a problem you're going to face. So, to the extent that this stops you from over trading, okay, missed money is better than lost money. Let that trade go. You don't know what you're doing. But at the professional level, this does not make sense. Can anyone relate to that? That at the professional level, this does not make sense. To me, it can be as much of a sin to pass the perfect trade with no reason as it is to take a trade that was questionable. Now, you know what? Not everybody will agree with this. And as a matter of fact, there are other, I think, good traders out there that I know that would probably disagree with me on this. There's some people out there that would say, oh, you always, if you're not sure, always pass the trade. There's a lot of stuff I don't agree with. There's a lot of stuff I'm kind of the outsider on. I don't agree with that, because when you reach a level where this is what you do you understand, do you see the way that I trade? I look for certain setups, and when I see one of those great setups, it could make my whole week, or it could make half the week in one trade. And to sit there and just pass that for no reason, that's a sin, as well as it is to, if you take a losing trade, what do you lose? You lose what you risked. One risk unit, whatever you're risking. 50, 100, 500, 1,000, 1,200 bucks, whatever it is. But if you miss a good trade, you may have missed 3-4 times that. It's not acceptable to me. So I don't know if this should make the top of the list, but I do want to throw that out there, that this is not always a good saying. A lot of people will sit back and, there's a lot of good trades out there that maybe you don't have the confidence to do yet. And the excuse will always be, well, missed money is better than lost money. I'll just let that one go. And you watch trade after trade go by. There's two ways that newer traders can struggle sometimes, and one is to constantly take trades that aren't working, but the other one is when you have a great trade at your fingertips, is to just watch it go flying by you because you don't know how to get into it. And you hear this all the time. It's again, one of the most common things I hear is, gee, Paul, look at this stock. Boom, I had my finger on the button, I just didn't hit the mouse. Well, okay. You got to hit the mouse. That's part of trading, right? Some others to discuss, kind of more or less one-line hits. Number 4. Again, this is one you may not hear a lot. This is maybe only from my mouth, but in general, anything that teaches you to trade differently as a new trader is wrong. Think about it. Why is it wrong? Say, Paul, I'm a new trader. You're showing me all this professional stuff. You're showing me all these entries that are just blowing my mind. What do you do? I can't. I'm new. That's wrong. If you learn the baby way to trade, when are you going to learn the right way? Think about any profession. Do you learn how to operate, assuming that you're going to screw it up? And then later, does some doctor come up and show you the right way to operate because they taught you the wrong way initially? I mean, where? Anywhere. You take golf lessons. Do they show you, well, here's what I'm going to do. I'm going to show you how to hit the ball because you're new, because I know you're going to hit it really bad. So I don't want you to get too far out of bounds. And then, someday later when you get better, we'll teach you how you really swing a golf club. I mean, where do you learn that way? But yet in trading, so many of the rules for traders are, oh, well, you're a new trader, so do it like this. What does that mean? You're a new trader, do it like this? What is the safety net that you have as a new trader? There's only one thing you do different as a new trader. You learn and you take the most advanced setup with the most advanced complicated entry in the world. What's the one thing you have as your safety net? Right. You have one safety net, and that is the fact that you're risking nothing, then small, and building into a larger risk amount. You don't double up. You don't say, well, I'm risking $10, but now let me see what I can do to minimize that risk because I may lose. No, you learn how to trade right. And you just go completely, to the wall from day one, and you trade like an aggressive, crazy trader, but you're risking $5. That's true, Ella, and there's nothing wrong with learning from simple to complex. I'm not saying that you can't start off simple. What I'm saying is that you don't start off learning the wrong way. And you've been through class, you know, right? We learn the structure. That's what I would call simple. We learn a lot of advanced techniques to magnify what we do to make more money that gets more complicated. So I have nothing against simple. We're not having the same argument. Simple, build on it, that's great. But what I'm saying is to learn things that are just wrong to compensate for the fact that you may lose as a beginning trader. Okay? Right, David. Yeah, that's an example. Right. I mean, when well, I'm gonna leave it at that. But I just want you to remember that if you're learning, if you ever whatever you're reading or hearing, if you're seeing the words, well, because you're new, do this, stop and say, well, wait a minute. I don't want to be new forever. And if I'm learning this because I'm new, when are you going to tell me what to do when I'm good? Right? Everybody, for example, I'll give you an example of exactly what I mean. It goes back to a prior slide. All the time you hear this talk about how to minimize your losses. No, that's not what you should learn. You should learn how to trade. And when does somebody step up to you and tap you on the shoulder and say, okay, now you're doing better, let's maximize your gains? See, it never happens. People stick with the old bad habits all the time. Pretend this says number 3 because we're going to the real number 4 now. The number didn't change. And this one's a little fuzzy here too, and this may not hit all of you. But if you're learning for yourself, or you're trying to learn for yourself, or you just don't have time to dedicate or the money to dedicate to learning any other way, or no, that's fine. I told you I support that. But there's a wrong way to try and learn for yourself as well. Even if you're learning for yourself, there's a wrong thing to do. And that is called reverse engineering. And again, the reason I bring some of these up that some of you may not relate to initially, or maybe you relate to when I explain it to them, and you say, where do you get this stuff from? Again, it's because I see so many people do the wrong thing and they come to me with this stuff. And the example I want to give you in real life, I guess, to help you relate to what I mean, is think about somebody who's really smart, right? But they know nothing about football. And they get promoted to become the coach of a professional college team, right? So they know nothing about football. So what they decide to do is they say, okay, I'm a smart person, I'm a statistical person. I've gone and I've studied football statistics, and I have found that the greatest gains in football come from this thing that's called a Hail Mary pass. I'm not sure what that is, but the Hail Mary pass has generated the greatest gains in football, and in order to score touchdowns, I want the greatest gains. Therefore, I'm going to set up the offense of my new team, and every single play, we're going to go out, and we're going to throw the ball 70 yards into a crowd and hope that we catch it. Maybe it's a stupid analogy. To me, it kind of makes some sense. In other words, what I see people do to me all the time is they look at the high of the day list at the end of the day, and they find some biotech stock that went from $2 to $7. And they say, boy, if I would have got in right here, I could have made $12,000 today. And they say, and then they go back and they try and say, okay, how could I have gotten into that stock? And they figure it out. And then they try it the next day on a different stock, and it doesn't work. Give me some feedback here. Do you understand what I'm saying? Do you have a question? Is it because there's not a whole lot more to this other than this just doesn't work. You can't look at the greatest play out there or the biggest mover and go back and say, how would I have gotten into it? Because this is the albatross. This is not the norm. This is the deviant. This is the less than point. This is the less than 3%. This is the obscure stuff. Now, I'm not saying somebody couldn't make a living learning this. I'm just saying you're in a different thing here. You're not doing the normal thing. And again, you don't have to like what I like, but what I like and what I think most people like and gravitate to and is the easiest is boring. We have a saying in the room all the time. Good trading is boring. It is boring. We do our little homework. We find a few things. Boom, boom, boom. Let them play out. We're done. Don't make it too complicated. So reverse engineering is a term you've heard me use before. I'm not sure anyone uses it in trading other than I do, but I've just seen it so many times where instead of learning from the ground up, from the charts, from the highest time frame on down, how you read a chart, people look for the home run move and then try and figure out what they could have done to get into it, and they're just never ever going to learn that way. Yeah, you're right, David. I'm clutching at straws here for a good analogy so people can relate to what I see all the time. But to me, it's what I see. But actually, it's not debunked because it's true, right? Because the Hail Mary, while it is maybe the greatest, in terms of what's the biggest play out there in football, but it never works. And that's my point. And so is it true for the trader who goes for the biotech stock that went from $2 to $7. Gee, yes, when you hit it, congratulations, but you hit it 1 in 100 times. Not even 1 in 100, right? So I think that was the point, that, yeah, it's a very, very low odds type of thing. Number 5, we just have a couple left here, and then a couple of good ones. This is a fairly quick one. Scalping is a good way to earn quick profits, especially you are bad at managing trades. And this is, again, this is the bad advice category. See, and again, I'm not against scalping at all. I think scalping is wonderful. I don't even know how you define scalping, but the way most people use the term, it's wrong and it costs you money. See, it's all relative. And why this is a bad saying up here is scalping is a good way to earn quick profits, especially if you're bad at managing trades. See, a lot of people can't manage well. So they say, well, okay, I'm just going to be a scalper. I'm going to take these little moves. But it's all relative. In other words, taking a 10-cent target with a 5-cent stop will work no better than taking a $1 target with a 50-cent stop if you don't manage or follow the rules upon what you're trying to do. So even as a scalper, you still have to hit those small targets and follow those small stops and do it on a regular basis to make money. You haven't really changed anything. You've just taken, day trading, which is already a video in fast motion, and put it in hyper motion. But you're not going to change what you do if you do the same things. Does that make sense? The point of this is that scalping is not an easier style. It doesn't change the management. Does that make sense, everyone? See, what I hear a lot, where this comes from to some extent, is that people will be in a trade and they'll have this little profit, and their intent was to hold it for a while, and they say, well, I'm selling it, I'm going to scalp out of it, is what they say. I'll scalp out of it. Well, here's the thing. If you want to be a scalper, you can, but you know what your share size needs to be? Like, 5, 10, or more thousand shares. If you want to take BAC and trade it for 4 or 5 cents, that's fine. I'm all for that. That's actually a pretty good style. But don't tell me you're going to do it with 300 shares and make your living doing that. Do you understand what I'm saying, everybody? So again, it's one of those little pitfall, bad advice things that I see, which is to say, well, I have a hard time holding my positions, I'll become a scalper. Well, you'll just not make money 5 times faster is all that's going to happen. And again, I'm not at all, I actually like scalping a lot. I never fully gravitated toward that, but I've always been on the verge of wanting to do that. Maybe it's just that it's a little more hyper than I like to be, but it's a good thing. It's just you have to do it properly. And it still requires the same management skill as any other trade does. You can't take relatively small targets compared to your stops unless you're doing it extremely accurately. You either have to have a great batting average or a nice average gainer compared to average loser. You have to have one of those. Scalping is often an excuse to going for chicken targets, which leads to number 6, which is my most dreaded saying of all: you can't go broke taking a profit. I'm not going to belabor this because I've talked about this in other events, but yeah, you can go broke taking a profit. As a matter of fact, this is a famous saying, and I forgot who said it other than I, but there's somebody actually has a quote on this. Good traders, new traders go broke taking large losses. Good traders go broke taking small profits. I can see I have gone through all this, like when I learned to take stops, then started learning management. Yeah. Yeah, isn't it kind of interesting, Andres? That's why I like you guys here that have been through this. When you're on the other side looking back, isn't it all seem clear all of a sudden? When you kind of hover above it all and you look down and you say, boy, that's so clear, right? But when you're in the midst of it, when you're in the thick in the woods, it's hard to see what's going on sometimes. So that's all I want to belabor that one is just that you get the point of this. All right, a couple of good ideas, and we're just running a few minutes later, but not too bad. I have two here. I have two good ones, and again, the topic tonight is advice that you hear, sayings that you hear, and the reason I felt it was worthy of an evening discussion is because there's so many things you hear when you start, even in books. There are many books that just tell you the wrong thing to do. Just, books are not really to learn from. They're interesting. You pick up some tidbits. They're fun, but you're not going to learn necessarily from them. But there's so many things that are just wrong that are said out there. But here's a couple of good ones. And this first one is so boring. Believe it or not, probably the first thing you do here trading is actually one of the sayings that goes on and lives to be a really good thing. Boring. There are only two times when you have an edge in trading. Now, this is a whole separate event I did a long time ago. The two times you have an edge. There's only two times you have an edge in trading. And one of them is when you're trading a trend. That trend is the market for the 4 months prior to the virus. That is a trend. And that was beautiful to play. And you just assume that trend is going to continue on until it doesn't. And it's beyond just a saying. But, like in class, for example, we have this very complicated section where we talk about, when a stock consolidates for a while. It could be what's known as a reversal type base, where if the pattern was going up, now it's going to go down, or it could be a continuation type base. And there's all this different criteria we look at to help determine which way it's going to go. And then I had something at the end of class to say, you know what? There are times where it's clear what type of base it is, but when it's not clear, you know what often works better? Is just defer back to the trend as your friend. It's that powerful that despite all the other wonderful things we look at, sometimes you say, hey, you know what? I'm not going to go against this trend. Even though it looks sloppy, it doesn't look good, it doesn't look whatever, the trend is still your friend. Let me ask you another question. And again, seminar program member is not allowed. Assuming that trends are either up, down, or sideways, when you break an uptrend, what is the next most likely trend to go into? When you clearly have broken an uptrend, no argument, what is the next most likely trend to go into, everybody? Statistically speaking, what is the next most likely trend to go into when you break an uptrend? Boy, Karma just doesn't get this. No seminar people allowed. The next most likely trend is to go back into the uptrend, even after you break it. Yeah. Statistically speaking, you break the uptrend, boom, you go right back into it. Now, of course, lots of times you go sideways and down and whatever, and it's all the stuff we analyze and figure out as chart readers. But I just want to make you aware of that fighting the trend really is a bad thing to do. And that is to me, it's almost like the only saying that you hear early and up front that actually is more than its weight in gold, and you maybe don't even realize it sometimes. This is rare, good advice thing because it's one of the first things you hear and one of the only that is not wrong. And here's the second one. This is just a little throw in here that amazingly there's a saying out there that you hear in English that's called buy the rumor and sell the news. And amazingly, that is a pretty accurate comment as well. We know it in technical language. This is the layman's concept of the fact that all known and most quasi-known events are built into the price pattern. It's very true. It's why news never really works, unless it's true shock value news. You still have to read the chart to determine how much and to realize that there may be some shock in the news and the balancing act that comes between those that have to buy and have to sell. But in general, this is good. This is good advice. It's how much of the price pattern is built, how much of the news is already built into the price pattern. And you see examples of this all the time. A stock that releases the best earnings that they've had for a year, and the stock falls for the next 3 months. How can that possibly be? If you're fundamental, you just scratch your head. Well, it's because in anticipation of that great earnings report, the stock ran up so much that it was built into the price already. Okay? I'm including for the last couple and for a few of these going forward what I consider to be a very important concept, and that is what I call the three-legged stool thing. And that is that I feel a lot of people can struggle. Number one, because they never do learn charts well enough. That's why I call one-legged stool superior technical understanding. You can't just kind of know the charts. You have to really, really know them and understand them. And then, but even when you have that, there's two other legs to the stool to me. The psychological, which can also be influenced by confidence/experience, and math and probabilities. Math and probabilities to me deserves a full leg of the stool sometimes. Which is to say, I have all the tech. To me, math and probabilities comes down to what I call a moment in time. You can have all the technical knowledge in the world, and I say sometimes, you know what? I'm shorting this right here. Boom. So I think it's important to keep that in mind, that you need to pick up an education, I think, in all three of those legs to some extent. And starting off with great technical understanding is what really helps those other two legs develop. You have to start with that. Next event will be Wednesday, April 18th. Title will be determined. You'll be notified, of course, and that'll be a more technical one. There are only a couple charts in this one. Sorry about that. And the next seminar program starts Saturday, April 18th. There will be the Friday Introduction to Mastering Technical Analysis that you will all be invited to for free. And then for those of you considering the next leg of the seminar program, the next cycle starts up on April 18th. And for all you seminar students, this one also includes the mastering options, which I only do approximately annually, 9 to 12 months or something like that. Okay. Another quick reminder to all you, because so many people just still don't aware of this. If you are looking for money to day trade because your money's all tied up long term, or you want to day trade and it takes $25,000 to be a day trader by law, there is a way around that. It's called prop trading. You can be day trading in 48 hours with no hoops to go through. You keep 95% of your profit. Just email me if you have a question about that. I don't want to go into it here. And from the standpoint of personal trading issues, this is among the most. Well, thank you, Gary. I mean, I really, really appreciate that. Because I know everybody loves the flashy charts and, ooh, look at all the money you can make and blah, blah, blah. And, and I like doing that, but this really is where some of the most important lessons are. So I really thank you for saying that, because I know it to be true. But I also know that sometimes people, especially in the early stages, are kind of like, well, that was a little boring tonight, blah, blah, blah. But I do appreciate it. Thanks, guys. If you have any questions, feel free. I'm in no hurry. If not, I'll say goodnight to the rest of you, and we will call it a night. If you are available at all during the week, check out the DTS trading room. You don't have to be there like every day. I don't see any questions. Are we good? Good, good? All right. Okay, guys. Have a good one. Have a good rest of the week. And we'll see you guys at the next event. Take care.